Okay, recording video on Saturday, the 9th of July 2022. It's just gone 11:49 p.m. Chicago time. It's 2:49 in the afternoon of Sunday here in Australia. So, do hope you are doing well. We're going to go through another weekend futures market recap with these 15 charts which represent the largest futures markets. We've got the Forex contracts over here. We've got the Euro, British Pound, Aussie Dollar, Japanese Yen. Two of the largest financial markets here with the Emini and the 10-year notes. We've got our precious metals with gold and silver, and then Bitcoin, which you could think of as e-gold. And then our kind of industrial commodities, ag commodities over here. We've got our energy complex with the crude and natural gas, and then copper down at the bottom. And on the right-hand side, the ag commodities are corn, soybeans, and wheat. And each of these charts exactly the same better indicators, the simplified view on the chart, so we can look at the signals and see what is going on. So last weekend in the futures market recap, we talked about maybe we would see some weakness in the dollar index last week, which we did not see. Dollar index continued to strengthen, and the other forex contracts kind of lurched down. But are we going to get the turn this week? So we're going to look at those charts. We also saw that we were lining up for the seasonal trade on the E-mini, kind of with strength after the 4th of July weekend, and that popped nicely this week. Been holding that contract all week. I think it's up about 150 points, maybe a little bit more on that trade. And let's see if that's going to continue into next week. And then we also saw that natural gas was likely to pop this week, and we did get signals, and that has popped. So let me show you that one first. So natural gas, here's the signals that we got. At the end of last week, we were kind of sitting here at the 3rd of July. And we'd had two of the three signals kind of go off. We had exhaustion cell, bullish divergence, and flush patterns, showing that on the downside we were kind of exhausted on better momentum, which is a volume-based momentum indicator. We had blue professional bars here coming in right at the lows, which is nice, and we had cracked above the trailing stop, trails down, better pro-am. Behind the professional activities. So we'd had some strength showing that the professionals were legging in at these lows, and they'd kind of turned the corner at this point here. The only thing we were missing was oversold on better sine wave, which is the price-based indicator. And here we go. We got those oversold kind of signals on the Monday. Is that the Monday? Yep, it was the Monday, 4th July. And we got more oversold kind of activity a couple of days later here, and we had our triple signals go off. We had some nice little signs of strength showing that the 540 level was holding, and then bang, Thursday, Friday we kind of popped up to 640. This activity here, I know we got blue professional bars here, but this whole thing is blue professional bars kind of buying the breakout through that resistance kind of level here, and we've just settled down a little bit into $6. So what we need is this whole area of professional activity to hold kind of around here at $6. We need to get back up through 620 and then through 640, and that would show us that we've got a nice kind of change in trend in natural gas, and we are going places. So natural gas is looking strong at the moment. We just need kind of confirmation there. We've also had this week signals in copper. So copper has been nastily kind of beat down here. We had no signals going on throughout this whole kind of decline until this last week. Last couple of days we've had our triple signals go off. So we've got a big exhaustion cell signal down here at 330. No blue professional bars right at the lows here, but they were definitely kind of picking it up as we were kind of coming down. At this levels they were selling that retrace and getting the move going here, and then they're picking it up down here. And because we busted above those blue professional bars, that would show that they're kind of accumulating down at these levels. So we got that exhaustion cell signal, we got bullish divergence, we've got the blue professional bars, and we're oversold on better sine wave, and that's what's given us our triple signals kind of going off here. So we need to get through 360 on copper to show that we're kind of strengthening on copper there. Crude, not so sure on crude. We kind of sold down pretty hard here through 104 down through 100. No blue professional bars at the lows down here, and we've kind of rallied back to this area. So blue professional bars here on Friday as well. if we kind of continue to crack up through 105, 106, then it is a change in trend, and these are kind of false signals. But it's not as convincing as the other charts because we haven't had blue professional bars kind of picking off those lows. So I don't know. It's interesting that the news is so bad at the moment, and the weakness in the economy is kind of evident. But we've got natural gas and copper kind of seemingly signaling that they're going to strengthen. So whether that's driven off potential weakness in the dollar index, or is it strength in the economy, I don't know, or shortages. So for whatever reason, those are the signals on kind of the industrial commodities. Ag commodities have also kind of perked up this week. So let me show you. This is corn, first of all. We haven't had signals on corn because we didn't have exhaustion sell. The last signals we had were these nice short signals here, bang, but we kind of oversold. We got blue professional bars kind of step in. The thing that we didn't get exhaustion sell. I can adjust the settings on the better indicators to get us some signals here, but it means looking at the look back period, stretching it out to a couple of hundred bars, which I don't like doing, where this would show an exhaustion pattern, and that's kind of getting the move going. So a technical point there to do with the settings of the better indicators, but that has not signaled, although we have an exhaustion pattern back here because we didn't get exhaustion kind of down here. But anyway, it is rallying. So we have blue professional bars, we're oversold, we got exhaustion buy here, maybe getting the move going in corn. The signals did come in wheat. We're a little bit kind of clearer. Here we tried last time around to kind of catch at this level. We didn't. We kind of lurched down to 800 on wheat. Exhaustion sell, bullish divergence, and blue professional bars kind of step in here, and we've kind of pushed up on wheat. And on soybeans, we have not had a signal here because we didn't have blue professional bars at the lows kind of down here. So it has strengthened over the last couple of days, but not because of professional buying the lows there. I think what's going on all these contracts is we've come down to really important kind of technical levels, and I'll show you the kind of long-term charts here of the daily chart on corn. Here we go. This is the rally that we've been sitting through for the last 2 years, year and a half, on corn, and we came down to these really important breakout levels. So it was a previous high here that we weakened, and then this was a gathering pattern. A lot of blue professional bars buying in anticipation of a breakout above that previous kind of resistance level. So they bought it here, they sold it up here at these highs with exhaustion buy, and we've come back down to that whole level. So that whole level at 570 is really important on corn. On soybeans, similar type thing. Here you can see all those blue professional bars, the breakout at those, and we didn't have professional taking profits up here at those highs. That was kind of getting the move going. So it's because we're bouncing off these levels where previously it was a breakout from the professionals. Same pattern here again. Come up to a previous high, it's a gathering pattern here, buying in anticipation of breaking out above those highs, and we kind of rally. We come back into that level and they're picking it up again. And wheat, I think the same thing's going on. Yep, on the daily chart of wheat. So here is kind of explosive mood here with all these succession of gap up days, and we've come back down to that area of the blue professional bars kind of stepping in. So yeah, it's interesting that we've got strength in the ag commodities as well, natural gas, copper, and so on. So that's all kind of going well. Gold, we are coming up to resistance here. Gold and silver are both showing different patterns. So we've got a little bit of a bounce. We've back to 1750, but it's exhaustion buy, so short covering rally. Blue professional bars kind of come in. We immediately bounce off better pro-am kind of stair steps down, and so that looks kind of weak for gold. But on silver's actually showing, oops, I hate it when I do that. I hit just a fraction off, and it's this version 10 of TradeStation where it kind of closes the window instead of opens it. Anyway, here we go, 900 tip bar chart on silver, and this week we've got signals to go long on silver. A whole bunch of blue professional bars. I like seeing that, where we had a lot of blue professional bars kind of getting in. It's almost like they sold it down at this point here. We rallied back up to the top of that range and continue to sell it down. The same type of activity is now buying it up kind of down here. So we've got our exhaustion, sell, bullish divergence, blue professional bars at the lows, we're oversold and better sine wave, bang, we got our triple indicators, nice little signs of strength going on there. So getting out of this kind of range here at 1940 would be what we're looking for this week to show that they've turned this market around and silver's going to rally. But gold, I don't think so. It's kind of going the other way. Bitcoin's been super volatile this week, where these blue professional bars keep on coming in en masse and pushing the market up higher and higher. We had signals at the beginning of last week here. It was super volatile. We came back down to test this level at 19,000, and then we kind of got going here. These blue professional bars were almost like those kind of gathering patterns at a previous high, like we saw before on the ag commodities, corn, soybeans, and wheat, where we come back up to a previous level. Whole bunch of blue professional bars buying in anticipation of a continuation of the rally. So although we have kind of some weak signals when we continue through the highs of that, that's what the professionals were doing at that level. But now we've kind of continued on to 22s, and we've come back up to have a little bit of trouble up here. We kind of super explosive kind of moves up here to 2150 or whatever that number is up at the highs, and we kind of weakened from there. So let's see this week if we come back down into oversold, blue professional bars kind of keep us in this range, above this breakout level. This is absolutely key as a level that needs to hold. So if we get kind of a pushback down, blue professional bars kind of come in here, we have oversold on better sine wave. If that area kind of holds, then we're likely to look at rallying back up through 22s. So Emini has done really nicely this week. We had the seasonal trade that was setting up from just before, day or two before 4th of July, but it really has strength after the 4th of July when you look at kind of the stats on seasonal trade. And we've kind of rallied up to 39s. We closed at 39.06 on Friday there. Now, 15-minute chart. Although we have some signals here, we have some signals that it's kind of weak, overbought and so on. There's not a whole bunch of blue professional bars at the highs, so I'm not kind of keen that it's going to kind of reverse and go the other way. When I look at the 15-minute chart, though, this is what I'm saying is this whole confluence of resistance kind of going on the highest time frame here. So we've got pullback to end of trend with resistance here on the highest time frame. I'm looking for this level. If we get above this resistance level at this 39.18 level, this is going to probably turn into a trending move on the upside. And when we look at it in terms of volume patterns, there's nothing here to stop us. There's no amateur bars at the highs like here with kind of Rambo patterns to say this is being led by the amateurs and therefore it's weak and likely to collapse. There's no blue professional bars kind of taking profits like this at the highs. So because there's no professional or amateur bars showing what might be happening at those highs, we're going to kind of keep on busting up through 3900s, I think. So that's what I'll be looking for, but we need Monday to be a good day to get us up through these highs. So that's the E-mini there on that chart, and 10 years. So 10 years, I thought that this was we had a nice trade 2 weeks ago on the 10 years, but it's kind of weakened this week, and it's all because of this. When we look at this on the daily chart, that there was no blue professional bars at the lows, and we were just having a little bit of a technical bounce off an exhaustion pattern, a flush pattern up here. The last time we had blue professional bars here and here, they were selling it down. So I know we've got some exhaustion patterns and flush patterns and so on, but we've had no blue professional bars kind of picking up the lows. A little bbit when we go up to the 460-minute chart here, some blue professional bars. Again, that's why on the lowest time frame we had a bounce at that point, because the professionals did come in there. But on the higher time frames, it's not a change in trend because we've not seen that professional activity. So let's wait and see. We could get another kind of signal on the 10 years this week because we've got our exhaustion, sell, bullish divergence, no blue professional bars kind of down here. So there's nothing going on 10-year yet, but we'll watch it for this week. And then lastly, the currencies. So we did not get the weakness in the currencies I was potentially looking for. On the daily charts here, you can see we're overbought. We've got signals kind of some days, weeks ago, on dollar index, we kind of lurched higher to 108, but we closed pretty weak for the week on the dollar index. And you can start to see the signals starting to come up on the forex charts, but it's not consistent yet. We've got Japanese yen. We've got more kind of signals here, blue professional bars at the lows. And if you look at Japanese yen, it's like this level at 73. We keep on coming down. Exhaustion sell, bullish divergence, blue professional bars at the lows, at the lows, at the lows here. So it's taking its time, but when it cracks, you know, the Japanese yen could go for a little bit of a rally. So Japanese yen, let's see this week whether we get that. British pound, despite, you know, Johnson resigning as Prime Minister, the pound is strong. So this is signals long couple of days ago in anticipation. That was before Johnson had actually resigned, but we'd had exhaustion sell, bullish divergence, blue professional bars at the lows. We tested down into 19.5 and we've rallied up. So you know, we could be breaking through this 20.5 level here, and we could get strength in the pound. Who'd have known it? Euro, kind of, we didn't get blue professional bars at the lows, but we've had blue professional bars coming in the last day. So, and we had a signal a while ago. Let's see if we get through, you know, 2.5 here on the euro, you know, and all the currencies start to rally against the dollar index. That's a possibility. Aussie dollar, not at the moment. We haven't got any kind of convincing signals kind of either way on the dollar, Aussie dollar. So Japanese yen, we're still waiting for that turn in the Japanese yen. I don't know, but it didn't happen last week in the currencies that kind of lurched down. So maybe we've kind of come down to levels that people get interested, but we'll kind of wait and see. For me, the most interesting questions are seasonality trade in the E-mini this week. If that kind of continue to rally through 3900 and a bit, that'll be good for a continuation of that seasonal rally, and that could go for like another week, which would be terrific. Looking for natural gas to continue to strengthen through $6.36. And copper, whether copper is going to continue to rally through $3 kind of 56. Those for me are kind of the most interesting charts at the moment. So there we go. Enjoy your weekend, and I'm looking forward to next week's trade.